Good morning, everybody. It's the 1st of September. We are Signal Centre talking bull. Apologies for the slight delay in the start. A few technical issues there, but all up and running and good to go. How you doing, gents?
Yeah, not bad, thanks, mate. How are you?
Yeah, very well, thank you.
I'm very relieved, actually, after last night's football.
I'm not surprised. The referee did you a massive favour there, didn't he?
No,
An extra couple of minutes.
No.
absolutely not. It was like they wasted 15 minutes and he only gave us 8. We could have easily another 3 or 4 goals.
Yeah, of course you could.
It serves Newcastle right. Absolute time wasters. The most frustrating game I've ever seen. They started wasting time in the first 5 minutes. It was incredible.
Yeah. Okay.
And it's a shame because they started really, really well. So they could have sort of like definitely, if they'd have kept that up, they could have put us in real trouble. But yeah, once they got that goal, it was like that was the end of the game as far as they're concerned, just wasting time wasters. But I suppose that's the only way you can play these the best clubs in the world. Neither of you two would know about it, apart from maybe Joe's got a little bit of a hint of it because he's got like 5 unbeaten.
Yeah, very nice indeed. Manchester United next, so challenge for that.
That's a gimme. That's a gimme. Liverpool just gave them 3 points to keep them up.
Yeah,
but Arsenal will smash them.
Let's hope so, eh? Okay, so let's get stuck into the latest headline, shall we? Bit of volatility yesterday in the markets, looking a bit under threat in a few of the key asset classes that we look at. So major headlines affecting markets over the last 24 hours. First of all, we had the US employment growth slowing. The revamped ADP employment reported an increase in private sector payrolls of 132,000 for August after an increase of close to 270,000 in July. This is also below the consensus forecast of 290,000 by a considerable distance. Obviously, we were expecting maybe a bit of an erratic number there, given that it was a new methodology that was being used. There was a significant dip in jobs for the smallest companies and mid-sized employees of 250 to 500 employees, and that also recorded an employment decline for the month. In terms of what's happening with inflation, fresh record high for Eurozone inflation was posted yesterday. The consumer prices increased 0.5% for August, with a year-on-year rate increasing to fresh record highs of 9.1%, which is above the consensus forecast of 9%. So shows there's no let up at the moment in inflation. We're not seeing it peak. We are continue to see this move to the upside, which is a concern. The hawkish Fed rhetoric continued yesterday. The Cleveland Fed President Mester stated that it was far too early to conclude that inflation has peaked, while wage pressure shows little sign of abating. In this context, she did not anticipate a cut in interest rates this year. US yields continue to increase. US Treasuries have remained under pressure over the last 24 hours, with the 2-year yield hitting a fresh 14-year high and the 10-year reaching 3.2%. We've had some weak Chinese data. The Caixin PMI manufacturing index dipped back into contraction territory with a reading of 49.5 for August from a previous reading of 50.4 and again below expectations. As a result of all of this, we saw the US dollar surge yet again. High yields helped underpin the US dollar, and there was also an element of defensive US support as equities continued to slide. The yen remained under pressure despite risk aversion, with the dollar year hitting a fresh 24-year high above 139.70 before posting a small correction. So plenty to talk about on the charts. Steve, you can kick us off with cryptos if that's okay. Generally our starting point, because we know a lot of people are interested in it, so we want to keep them engaged from the start of these streams if we can. So let's go to Bitcoin first of all.
Yeah, we show them what the Bitcoin's all about, and then we show them all the other assets that they probably should be trading. Here's the weekly chart. We've talked about this multiple times. We're breaking down back into this supportive area, so it's a little bit of slow go traffic. It's like when you get on the M1 and someone's flipped their car and you're just stuck in traffic for a little while. It's inevitable that they will get cleared, the roadblock will get cleared, and you can continue on your journey south of the border. So that's my view on Bitcoin. We are moving lower. There's nothing that can stop that from getting down there, in my opinion. So the support level we've got at the moment coming in is around about 19,500. We've had a breakdown. It keeps trying to sort of like pump its way up. 20,700 is the area of resistance, which is closest. Above that, we've got further resistance at 22,000, 25,250, and the major one up at 28,000. Seems a long way off now. We need a 50% move higher to even get close to sniffing at that resistance. So plenty of room on the downside. We've broken out of the bearish flag channel, and just as I say, a matter of time, but it's just slow go. There's no real Bitcoin is one of those markets that there's no real sellers in the market. It's all just people buying and holding. There's no one selling, hedging, maybe against other assets or other cryptos, but that's about it. So negative on Bitcoin, painting a really depressing picture for Bitcoin longs at the moment. But let's move on to other assets which have a little bit more history behind them. Gold, we've seen 4 negative days of price action since we spiked up to the 1765 level. We stalled there. That's your major resistance above, but also you've got this channel resistance which is coming in just above that at 1771, and then the third resistance we can see on this chart is just above the 1800 psychological level, 1808. But really the focus is on, again, similar to Bitcoin, the support level, this supportive area from around about the 1675 to 1690 area, really. This is, so it's a bit of a you know, we've got a 38.2% fib down here. That's, let me see where that's from. Yeah, that's from that top there. So this is a major support, and but we are heading there. We are going to retest it by the looks of things. It really needs some dollar weakness to sort of negate this this inevitable test. So at the moment, doesn't look like we're seeing any dollar weakness. If anything, this dollar's looking to push higher, which will impact on gold. And the real major level, or the major formation we've got to watch out for, is this double top formation. That's the swing high back in August 2020, and the 8th of March, the week of the 8th of March swing high. And that is that brought a neckline around this 1680 level. The measured move target of this is $1,365. Now, again, that's been a significant level in the past. We saw multiple multi-year highs there, so it doesn't look like a bad area to target. I wonder if we can bring up a 78.6. No, that won't help it. So yeah, just really looking at the previous multi-year price action around about that 1365 level. That's where it's targeting. There is a 61.8% fib before that, around 1440. Again, we need to break this support area and have confirmation on a weekly close or something below that, and that would sort of like set our sights on a move lower. Until then, dip buying in front of 1680 doesn't seem like a bad way to go, but in between, I'd leave it alone. Silver has broken down through support. We can see this over the last couple of days. Let's try and make these charts a bit bigger. Again, 4 days of negative price action. That this 5th day has pushed through it nicely. The support was at 1815. We're breaking below that. Next level of support. Let's get some fibs on the board. We're broken down below the 61.8 already. 78.6 comes in at 1560. You can see this area of confluence, supportive confluence, around about here, which gives us a few previous swing low levels to look at. That marks around about $17 all the way up to present price action. So that's levels to watch in silver. In copper, we've broken down. We have the shooting star candle from the 26th of August. I think we highlighted that. We've broken down through the support at 355, and next support comes in at 341.5. Below that, Again, let's stick some fibs on the board. See where we've got 338 and 327. The major support coming in at 313 on copper. Looking at crude oil, a second consecutive really sort of impressive down day we saw yesterday. I think we had this in the gun to head trade idea. We'll have a look at that in a minute. So I think this played out okay. And yeah, we're sort of trying to desperately to get down back towards this channel to look at, but it looks like the supportive area around about 85.40 looks potentially looks like we're going to retest that. However, if we do manage to get a stall in front of that, then there is potential for a reverse head and shoulders, inverse head and shoulders. This is a sort of play we're looking at. Maybe if the right shoulder stalls just around here, then that would be a nice inverse head and shoulders. But then obviously we do require another serious crude oil rally. At the moment, crude oil is really being battered between the supply problems or supply issues. The high dollar price is obviously keeping the price a little bit under pressure, but also the worry about recession stroke depression that the world economy seems to be falling into. So yeah, that's about it on the WTI crude oil. Let's just take a quick look at natural gas, which is hanging about this resistance area. We've spiked through it, got up to close to $10, just missed that breaking that $10 level, just stalled in front of it. So nice little psychological level to sort of like trade from. Support comes in the shape of 885, 886. Below that, we've got 840. Major one coming in at 755. Yeah, that's about it for the commodities.
Nicely done, Steve. Okay, let's take a look at FX then, starting off with the dollar index. As we said in the commentary at the start, dollar index has moved yet again to the upside. However, it still does remain below these major resistance levels that we've got on the daily chart. So back on the 29th of August, we had a little bit of a poke above previous resistance at 109.29, but we saw prices stall at that level, and we still remain pretty close to it. And potentially going to give that another test in the short term. Still a number of resistance levels on the upside that we do need to overcome for things to really get going on the upside. And of course, this is going to have a knock-on effect on a number of other assets, as Steve mentioned, particularly on gold. We're very close to a major support there. If that does break down, then it probably means we're going to have a break up in the dollar index for that to occur. So we'll continue to watch it. As we can see from the candles in the last few sessions, a little bit indecisive, a few dojis that have started to form on the chart. We have gapped higher today, and we can see that clearly on the intraday chart. Maybe giving away what I was looking at as a gun to the head, but probably going to miss out on that now. We can see here prices closed here yesterday at 11 o'clock. And we gapped higher at the midnight open, and prices then moved to the upside. Seeing a little bit of a retreat at the moment. We may see a pullback to fill that gap, which is fairly standard from a technical point of view. That we would expect will act as a support level and could be a base for a further drive to the upside. But clearly overall, we remain in a very bullish uptrend. And we would still favour buying dips as the preferred strategy for now. So this is having a knock-on impact, of course, on other currencies that are linked to the US dollar. We can see here yesterday further declines in the Aussie, a little bit of a fight back as things stand at the moment, potential for a hammer candle to form just in front of this 50% Fibonacci retracement level. Overall, trend still remains bearish, so the preferred strategy is to sell into strength, but we can't rule out any minor corrections in the short term. Taking a look at euro, we saw the euro actually stage a bit of a fight back in the last few sessions. It's holding up quite well, and I'll show you euro against some other currencies in a moment just to further highlight that. We saw euro dollar push high yesterday. Overall, the trend remains pretty awful, to be honest, on the downside. So any rally to the upside is likely to be limited, but there is a little bit of white space here for it to move into. We've got the downtrend line up here. We've got some other resistance lines to potentially target as well. I'd highlight that one there as one that would interest me. That's at 102.38. So if this euro strength continues and the dollar continues to be below that key kind of breakout level at 129.30, as we've mentioned, then we may see a little bit of upside in the euro versus the US dollar. Not the same situation on cable, however. We've seen sterling take over the mantle as pretty much the weakest currency, along with the Japanese yen. That broke down through key support at 117.59 and has continued to move lower. This now being potentially the fifth session of declines if we hold on to losses today. Trying to stage a little bit of a fight back as things stand at the moment. So we may see a little bit of a turnaround in the short term, but overall the trend remains very bearish. And again, we are likely to see upside limited on this one to around 112.00. 117.90, I would say. Just to further highlight the euro strength that we've seen, this is Euro Swiss. Was trading in a really nice downtrend, but we've seen a nice breakout of what looks to be maybe a bullish wedge. So we can draw that on there, indicating a wedge pattern, seen a nice break to the upside. I still think it's corrective. I'm not going to get excited about that being a bottom or going to lead to any sort of further gains really beyond this level here, which is at 99.72. Euro sterling was really interesting. That's had a really strong move to the upside. Look at that, 4 really strong green candles that we've posted consecutively there. We rallied into a 78.6% fib level at 86.40. We are seeing a little bit of stalling on that at the moment, and that's not surprising given how strong these previous 4 candles have been. So we may see a little bit of a pullback there, but overall that is very much on the front foot. Take a look at euro yen. That broke out of a resistance at 138.40 and has continued to push to the upside. Yen continues to be pretty weak overall. Take a look at some of the other currencies linked to the US dollar. We can see dollar Swiss has had a nice move to the upside. A little bit of a stalling on that over the last few hours or so. Dollar yen, quite interesting as well. That rallied to hit fresh 24-year highs with a little bit of a poke above that resistance at 139.39. But we've just come back below that in the last few hours. So it'll be interesting to see if the bulls have got the appetite to continue pushing that higher, or whether or not this is going to act as a pretty stiff resistance. And we're seeing these levels line up elsewhere. We've got that big resistance on the dollar index, things like gold as well. We've seen it there. And euro dollar, we're holding above a key support on that at the moment. So potentially at some really big levels at the moment. So that's that for the FX side of things. Let's move on to the indices. They had a pretty tough session yesterday. Starting off with the ASX 200, we are down 1.34% as things stand on this index at the moment. Really powerful and impulsive down candle that we've posted over the last day on this, having failed at this resistance up here at 71.34. So that looks to be on its way to challenging this minor support that we have here at 67.57. And I'm sure that'll probably line up with this short-term uptrend as well, roughly. So that would be an interesting test for the Aussie main index. And if we get any buying support around here, then maybe we have potential for a correction higher. If this is broken, then you'd have to say we're probably going to continue to move lower in line with the dominant downtrend. Looking at DAX, that's down by over 1% as well. As we can see, we rallied into the reverse side of this, what was a support level, now acting as a resistance. It did a pretty good job, and we've seen prices continue to move lower. The next major test for that is these lows that we posted down here between in July. Both of those lows were in July. We formed a short-term double bottom, which went on to hit the targets and almost the extended target of that double bottom. But then the sellers have stepped back in, and it's been pretty much one-way traffic since then. So 12,431 is the major level to watch there. If that fails to hold the price, as it also did back here in March, then we're looking for a move down to this 50% fib level at 12,130. NASDAQ, that suffered as well. We've broken down through this short-term uptrend line. We are challenging a couple of support levels here as well. We've got 61.8% fib level, which is around 12,070. That is from the move here from the low in June to the high that we posted in August. And that looks set to get a testing probably today. If it fails to hold, then we're looking for a move down to the 78.6, which is at 11,611. S&P 500, similar kind of setup really, been one-way traffic since reaching these highs back in mid-August. We're taking out this support as things stand at 39.46. Long way to go in the session, of course. We may well see a fight back at some point. We've also got trend support a little bit lower down. If this gives way, then we'd be looking for a move down to this 38.2% fib level, which is a major level on the longer term charts, actually from the height of the pandemic when we hit those lows in the S&P 500 to those highs that we posted in January earlier this year. So that will be an interesting level as it was back here. Not exact by any means, but it did see prices stabilize and a correction to the upside. So be interesting to see what sort of reaction we get there. If that fails to do a job, then we're eyeing up these previous lows from June. And if we break down below those, then that would paint a pretty dim picture, I think, for the S&P 500. Okay, FTSE. This has been holding up pretty well, as we know and talked about on many occasions before. There are a lot of constituents within the FTSE 100 index that are dollar linked. So we've got a lot of mining stocks, we've got a lot of oil stocks, and we've also got a lot of banking stocks as well, some of which are multinational and derive a lot of their revenue in dollars. But moreover from that, we've got interest rates obviously rising, and that is a good thing for banks. So we're seeing those hold up or have held up, but we're now seeing a bit of a sell-off here. Some really aggressive candles over the last few sessions. No sign of it slowing, down by 0.85% as things stand. So really following this, the break of this short-term uptrend, we have seen some aggressive selling take place. There's not a lot of support in here. There is a bit of cluster of price action in and around this kind of zone at 71.70. But really, I'll be eyeing up a move back down to this swing low that we posted in June, all the way down at 69.76. So it really looks like a challenging environment in the stock space at the moment. And maybe Jamie will be able to shed a bit more light on that when we run through some stocks right now.
Thank you, Joe. I'll just quickly share my screen. Here we go. We'll start off with our biggest gainer and loser of the day. Looking at our biggest loser, we have a stock called Amber, AMBA, Amberella, down 19.67%. This looks like it was on the back of earnings. We have a look here. Amberella earnings fall while sales increase in fiscal Q2. Sets Q3 revenue guidance, shares decline in pre-market. So that was actually before the open yesterday, and obviously it sold off in trading hours too. So down 19.67% there. Our biggest gainer, there was some, I couldn't find too much that gained yesterday, honestly, but I found NUWE or New Willis, up 131%. Obviously, it's only trading at $1.46. But let's have a quick look at what happened here. Here we go. One doubled in price, climbing 128% in Wednesday trading after the medical device company reported a 100% survival rate for high-risk coronary artery bypass patients treated with the company's Aquadex FlexFlow ultrafiltration system. That's a bit of a mouthful, but up 120%.
100% survival rate is the sort of numbers we want to see, right? That's fantastic.
We definitely like survival. It's probably, I mean, I don't know how these things work, so I can't really expand on that. I was going to say it's probably early days, but I haven't got a clue. So, but yeah, 100%, that's a good number for sure. We like survival. It's what we're all about. Up 100% as well. So I guess that works out quite nicely. Let's check out the heat map. Nothing really too crazy. Yesterday, it seems that the indices, we've had a few consecutive days of selling and the volume's been increasing too. So no relief in any of the stocks really. Meta had a half decent day yesterday, and we'll come on to that in a little bit. I think Snapchat did too. But other than that, it's more percentages down. Nothing as crazy as we have seen. Just a % or two here and there, but certainly nothing really standing out that's holding anything up at this stage. We used to have energy that was kind of performing quite well as a sector, but with oil coming off in the last couple of days, there's not even that to hold on to now. So yeah, it's looking pretty bleak right now. Let's jump into a couple of these names. Bed Bath & Beyond, I thought we'd check it out again. It's 21% down. I'm not sure when this will get back to its normality of just kind of being a bit of a...
They closed 150 stores or something, or announced they're closing a load of stores. from what I
Really?
saw. Yeah.
Let's have a quick look. Let's offer up 12 million shares to repay debt. Yeah.
Have you ever seen? Have you ever been past one of these shops?
No.
I've never seen anyone in them.
I've never even seen one of them.
Yeah.
Where are they?
There's one in Chelmsford, I'm sure. Or maybe I'm thinking about something else, but it's like just a bed shop.
Yeah, I mean.
Or is it a US company? I don't know. Maybe I'm getting confused.
Yeah, I'm not really sure. I mean, it's a bit of, I don't really know what really more you can say about this. I don't know if you guys want to expand. It's just loads of gaps.
No, not really.
No.
Good
Move on.
Yeah, let's go to CrowdStrike. Now, this had a pretty interesting move yesterday. I think it reported. Did it report earnings? Yeah, it reported earnings after the close on August 30th. Seems to have come in just above expectation, but bad price action yesterday. Let's bring up the volume. Yeah, you can see there the volume yesterday looking pretty bleak. 61.8% fib. We ran into that. I think we actually tried to sell this at some point and we got whipped out, but it seems like the move downwards is continuing now. So that looks pretty horrible, and that volume really doesn't look either. So keep an eye on that, but I'd expect further selling to come into today on CrowdStrike. Cisco I wanted to pull up. We've had, I mean, you can say that this day was positive here, but since we had the earnings gap out, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 out of the last 10 trading days have closed lower than it opened, so that isn't looking so good at all. Volume looking pretty bleak as well, especially on yesterday's trading, so yeah, not good there either. Not good here on GME. We're down through that 61.8 fib. There was really tried to put up a bit of buying pressure on the 29th, but that was overruled day before yesterday with this that's not really an outside candle, but you can see a pretty bearish looking candle, and then gap down yesterday and closing now below the previous wicks on this left side you can see here. So next stop for GameStop, 78.6 fib. We have got a little bit of consolidation at this point here where price has reacted off it previously, and that's down at $25. And then fading that, we've got these swing lows here at about 19.50. Earnings coming up for that as well on the 7th of September, so that's this time next week, I think. But yeah, not looking good. I said we'd come on to Meta. I mean, it gapped up. Well, I think we did have some news. What was it? Let me find. Meta found setting up a new group that will allow. Well, I don't think that was the reason why it went up, but Meta and Snap both went up. Does Meta own Snap? They don't own each other, do they? I can't remember.
I don't know. They might do. No, I'm not sure actually.
No, I'm not 100% now
Snap
thinking
wouldn't
about
trade
it.
anymore, would it?
Yeah. But regardless, we talked about the 61.8 fib and how important this level is, and it's held up again, surviving for now. But we gapped up, and actually at the start of trading, we moved up quite nicely. We're up 6.23%. We sold off throughout the session and closed near the low of the day. So perhaps a couple of people using that as a chance to get out of some positions. But yeah, not looking too hot. Up 3.67%, so I guess it's a little bit of a red of light, but not loving it particularly. Not loving Moderna particularly either. Coming back down to this pretty key support level, like Pfizer is, they're trading kind of quite similarly in this type of channel. We did put an idea out when Moderna, I think, was back here. We didn't quite get into that, and maybe some people just sold it when we said sell, but that would have been quite a nice one if you'd managed to get in on that kind of range-bound trade there. But yeah, it looks pretty horrible to me, heading back down to this key support about 122 to 117, that kind of band we have there. Snapchat up 8.69%. I think they're restructuring their company because they've realized they're in big trouble. They laid off, I think, 20% of their force, was looked at yesterday. Discontinuing projects in business restructuring. So someone like that, 8.69% up on the day. Pretty good volume as well, but I mean, in terms of the price action we've seen over the last kind of 6 months, it looks pretty horrible still. You can see all these gaps on the downside, and all these high volume days are red, and they're on gaps down too. So yeah, I'm not convinced that there's any turnaround. I need to see a bit more of a bottoming pattern for me. Although I guess this is the start of it. If we do kind of see a move up now, perhaps it's a bit of a higher low. There's a lot more work though to do here before I think this paints a more bullish picture. Tesla, we'll have a quick look at that. This was a hypothetical that we wrote about yesterday. We saw this break of support. It's not an idea we put out. Bit of a double top. It looks like we are breaking through this support level, heading back down to this pretty key zone we've got here of previous resistance, a 61.8 fib, and also we have a gap open there too. So that's quite a nice little confluence area. I'd expect some buyers to potentially step back in and try and defend, but certainly the short-term price action on Tesla looks pretty bleak. I'd expect that move to come through over the next week or so. I think that's pretty much it. I wanted to look at Rolls-Royce before we left, and even since I've started talking today, this is moving a lot lower. We noted this last week at support. I think we saw this bullish hammer on the 24th of August, which we thought, bullish hammer at support, it's a good sign, but there was no follow-through from that. And I think when we saw this day on the 26th, a really bearish Marazubu candle. Did I get it right? That was right, wasn't it?
Marabuzo.
That's what I said, surely. Don't go and check the tape. I don't want to talk about it. But yeah, when we saw this, I mean, we've just had selling since that point, and this support is well and truly broken. We checked this out on a weekly time frame. That gives us a more paints a more obvious picture for me. If we do close anywhere around where we are now tomorrow, then we've got a fair way to go lower. We can kind of get a bit of a measured move of this, so we can kind of take as we've been trading this channel, you can take the top to the bottom, extrapolate it out for a bit of a measured move. So you're looking somewhere around, let me get the right, there we go. This isn't what I wanted, but it will do the job. A little bit higher than that. There we go, something around that. It's not particularly well drawn, but you get the picture. That's where I'd be targeting in terms of a measured move from there, but looks pretty bleak. And again, as we say, when we're in these downtrends, which you can see Rolls-Royce is, we've got these higher volume days on the big sell-offs and lower volume on the rallies. So yeah, that one looks pretty bleak. I'd expect this to move a fair bit lower before getting a turnaround, if that is to happen, but looks pretty bleak right now. As does everything really. What's this? Avacta Group's kind of doing something. This is kind of nice. We're at a bit of a resistance level here, but had a pretty strong week last week, and we're up 3.5% today. So I guess that's finishing on a positive, but also not finishing on a positive. It all looks pretty rubbish right now.
Indeed. Okay, Jamie, thank you very much. Right, let's move it on to the gun to the head challenge then. So this is where each of us pick a trade idea. So there's 3 in total, about where we feel price could go maybe between now and 9 o'clock this evening. All the ideas that we publish have stops and targets, as you'd expect. They're all placed at market. So we are having a bit of issues with our stream this morning. So if you're watching this back after, obviously we've done this, do bear that in mind, that there will be a bit of a lag on that. But we keep track of all these ideas. It's been a pretty decent run that we've been on, actually. You can see all the trade ideas that we've done previously on our trading profile, signal_center. Just a quick look at the overall. Actually, we've been doing this for some time now. And we've published a fair amount of trades. And so far, the hypothetical P&L is going certainly in the right direction after the run that we've been on of late. So we base it on £1,000 account. We risk a 1% of capital per trade. We actually hit our previous high a significant amount of time ago. Actually, this was back in 2020, and then we went through a period of really sideways and not actually going anywhere. But since really the start of 2022, we've been on a nice upward move, and things have really started to kick on in the last few weeks or so as a result really of the increased volatility in markets. So that's certainly helping us from a trading perspective.
I think it could be as a result of COVID and lockdown. If you if you actually take that graph and superimpose the lockdowns in the UK, I think we've started to improve since we've opened up.
Yeah, definitely.
Could that
obviously
be
it was a challenge?
I'd argue we've started to improve since Jamie joined. I don't know. That could be a pretty key
catalyst.
I don't know.
Yeah, but if you
I think really what's helped is that Steve in this orange line has actually started to play the game finally, and now he's making all-time highs on his part. So yeah, well done to you, Steve. And yeah, Jamie's input has obviously helped, adding almost 15R to the balance as well. So that
I feel like I'm
all
helping a
helps.
little bit because my win rate's just moved above 40. So I'm
Yeah.
quite. That's the first time I've
Nice.
seen that. I'm going to check my Marizubo level though.
Ah, nice.
I can't believe this. I can't believe it.
Right, let's have a quick review of yesterday's trades then. So pretty gutted about my one, if I'm honest. This was NASDAQ, really tight stop on it actually, to be fair, but looked like it was rolling over yesterday. I went for it, went short, was looking for a big old win, and got stopped out just by that tick there,
Oh,
or that
that's tough.
candle there, before it then eventually went down to pretty close to the target. So it would have been a nice win, but that is one of the most frustrating things in trading, and it will happen to you again and again and again. So you just got to be able to shake those off and move on. Jamie, you were selling Ripple or XRP into this well-established resistance, and I believe you were nicely on side at the 9 o'clock close. So that candle there typically was actually the 9 o'clock close, but pretty nice call in terms of direction, and that resistance continues to do a job. So nice call from you. And Steve, the man with the golden touch at the minute, nailed it again. He was selling Brent crude again, really tight stop there, Steve, but played out very nicely for you on your trade yesterday. And at 9 o'clock, you were 2.98R on side. So another really nice win for you yesterday. So congratulations. And yeah, pick us another one today if you can.
I was going to hang my boots up. I think I've had a decent run. I might just stop now.
Everybody's hanging on your every word. You can't do that.
Well, listen, I just can't see what's going to slow this crude oil down. So I'm going to just go for it again. Again, have a nice tight stop. I still feel like we're going to, we've got a little bit more on the downside. We're just about to challenge the spike low that we had around $88. So if we manage to break there, there's really nothing to, it's a bit of a vacuum area probably down to around about the 86 level. So I'm going to sell into here. The stop can be at 89. Well, that gives it that's probably too big a stop, really, Steve-O. Yeah, I must go for this. That's too much, Steve. You just got to go for a nice 2-to-1 risk reward a day. Even that's quite a. Is this telling me not to go for this? Not sure. Yeah, I'm going to go.
It's not a lot happening, is there?
No. I'm going to go for this one. I'm going to sell crude oil, WTI crude oil at 88.20, targeting 85.80, stop at 89.40. So pretty tight stop. So be careful with this one.
Cool. Jamie, you got one ready?
Yes, I do. I'm good to go. I'm actually looking at Ethereum today. From a daily perspective, we've got a bit of a shooting star been posted yesterday, which is also a 61.8 fib of this move low we've seen over the last week or so. Drill it down to 4 hour, you can see that a little bit clearer. It looks like we've had a little bit of a bullish run since the back end of August, but this seems to be faltering a bit now. The bulls are really struggling to push this any higher. Drill it down to 1 hour chart, and you can see it does look like we're running up momentum. If I was to pull up MACDs and all the oscillators, that would support this, I'm sure. So I'm just hoping that we're kind of, again, similar to oil, this is the point where we start tipping over a bit. And that to me looks like where we're going. So I'm going to look to sell Ethereum at current price, which is 1539. There we go, 39. It's a little bit tricky with the stop. I think ideally I'd want to have it above the swing high, but then that messes around with the risk reward. So I'm keeping it a bit tighter than I probably would. I'm hoping this will literally be the candle where we close below these wicks and then we start shooting lower. So it's very risky, as a lot of these ideas we put out are, but you know, if you don't shoot, you don't score, and I want to score. So we'll keep the stop pretty tight at 1576, and this take profit will be right at the bottom at these swing lows we saw back in the 29th at 14.20. Actually, we'll go 14.21. There we go. That's a bit more on ball. So yeah, this, I mean, if we do get this play out, it would be a nice 3.19 trade. We're already moving in the wrong direction, which is a bad sign, but I'm hoping we do get that move lower today.
Best of luck. Okay, I'm going to take a look still at the indices. So I've got DAX up on the screen at the moment, and just looking at this on the 4-hour chart, we can see yesterday that we saw this sell-off really start to accelerate. We've taken out this swing low here from the 29th of August as things stand. Obviously, we haven't closed on this at the minute. This is a 4-hour bar. We've got some support down here to target in this green band. So I'm going to run with this. I need to slightly adjust my entry to where it currently is, which is at 12,672. I'm going to put a stop loss above the high of the 4-hour candle, hoping that it does close below this support level that we've highlighted. So that'll be at 12,786. Targeting a move down to 12,397, giving me a 2.43 risk reward ratio on DAX today. So looking for further downside in these indices, which, as we can see from the watch list on the right hand side, are off to a pretty poor start. So let's see if there's any follow through on that today. Okay, so there's 3 trade ideas. Feel free to check them out. They're all going to be published to our TradingView profile. I'll get mine done now, and yeah, we'll see how they do in tomorrow's video, and hopefully that'll be streaming live on TradingView, and we won't have any more technical issues. So that's getting published now. Some of the other guys, check them out if you please. Okay, so day ahead, we've got a couple of bits to keep an eye out for today. We've got the US jobless claims. That's at 1:30 UK time. At 3 o'clock UK time, we've got the US ISM manufacturing index number. Then to close the week off, we've got the non-farm payroll number, which is due out tomorrow. And then we've got a few dates to keep an eye out for next week. Quite a lot of central bank action, as you can see there. We've got the Reserve Bank of Australia policy decision on the 6th. We've got Canada doing theirs on the 7th. Then we've got the ECB on the 8th. And then to round off the week, we've got the Canadian employment number as well. So a few bits coming up fast that could be very pivotal for market direction, especially obviously those central bank comments and policy decisions. So that's that, I think. Gents, anything to add before we wrap it up?
No, all good.
No, all good from me.
Superb. Okay, well, we'll see you all tomorrow, and until then, everybody, trade safe. Goodbye.
Cheers.